Welcome to Ty's Daily Market Update. I'm Ty Wong reporting from New York, and it is Tuesday, July 28th. Okay, so let's start with Nick Timiraos. And Nick is still, I think, still relevant because Powell, who many believe is his source, is still there. And he writes that Christopher Waller, who was the finalist for the job that Warsh got, is not afraid to say the tough things. And he said at a dinner, about asking Warsh, saying, all these new committees, these working groups that you've tasked with these 5 different things to do. Well, you tell me who's on these groups and I'll tell you what they'll say. And basically it was a challenge that's saying there are no brilliant ideas that have been missed. You're basically just getting people to say publicly what you want to say, which is, obviously the McKinsey way. It's pretty smart. But I do like the fact that he's got these 5 task forces. There are only 3 people each with some support staff, and they're going to report in by the end of the year. And I do believe that the Fed is, as an institution, is too much ruled by PhD economists from the top handful of programs. So I think that a rethink is good. Warsh is the guy to do it. Powell was an attorney by trade, and that's important because attorneys don't really like to make big changes. Anyway, Timiraos writes again, he wrote about this over the weekend, or actually Friday, I believe. The Fed meets again this week with an outcome that is unusually uncertain. Many expected to hold rates steady, but a renewed inflation scare has put a surprise increase in play. The head of Citadel Strategy says that we're going to get a hike. I think he's wrong. I really think that, he says we're going to get a hike and we don't, nobody remembers. But, if we do get a hike, he's going to come out as a hero. And that's the, if you say something a little, off consensus, that's the risk you take, but the rewards are great. As we mentioned before, under Powell, it would be, sort of Powell, John Williams, and Jefferson. The Troika basically determined what they wanted and they tried to sell it. Warsh isn't doing it that way. He's doing it differently. He's going to see what comes out. Jim Bullard, likes what he's doing. You build support for change. But the thing with Warsh is, even in private, he hasn't been that forthcoming. Officials who sat through his first meetings came away without a clear sense of how he would approach the trade-offs ahead. So, that's why, I think Nick Timiraos is getting this from Powell or somebody else on the, on the FOMC. So, it's really still, important information. And I like Powell, and Warsh, I really like what I've seen so far. He's a little bit like Jamie Dimon, a little bit outspoken, but with more charm. Jamie Dimon is a street brawler. I think Kevin Warsh is more of, somebody who uses a samurai sword. So Bloomberg reports a headline, breathlessly, Nasdaq 100 heads for correction as AI rattles investors. The Nasdaq 100 index on track to enter a correction, as payoffs, they're worried about, how much money AI is really going to make versus the capital expenditure that, these people are making, the AI, Anthropic and OpenAI and other ones like it are making. Is it really going to pay off? And, Bloomberg is saying that the Nasdaq 100, only took 38 trading days to reach down 10%, back from the previous correction in March. In October 2025, from the record high, it took more than 100 sessions to drop 10%. Now, I'm really not much of a believer in correction. A 10% is a correction and a 20% is a bear market. In some ways that, is really sort of older thinking from, 2 generations ago, where the markets move more slowly and there was more momentum and you didn't get as much volatility. In my view, these are just numbers. It's great for a headline. That's what they use it for. Now, the Nasdaq 100 jumped nearly 34% in 2 months. If it's down 10%, you know what? It's just the number. But again, it's chip makers, Qualcomm, SanDisk, Marvell Technology, each down more than 30%. The Felix Semiconductor Index down 25% from its peak. So let's look at a chart. Now, this isn't, this is a 1-year chart. This doesn't really look great. And I enlarged this here. there are very few new intermediate highs, and just as risky, they're not higher lows. You keep getting sort of lower lows, right? We look like we're consolidating here, and then we got this big sort of AI sell-off, last week after we had good earnings, and and it wasn't impressive enough. So, I think you're getting a little bit of this. Now we're right on the 100-day moving average. Now, once again, I mean, this needs to consolidate, but the fact that enters a correction, I don't think is that important. I would like to see some consolidation because this chart doesn't look good. Where are the rest of the markets? Interestingly, the S&P is up, fairly broad-based, up almost 0.5% in the middle of the day here. We have bonds gaining. This is the best day in bonds for a little while, but. And so stocks are bouncing. Energy is down once again. What's interesting is the dollar, metals, and crypto are all down with sort of rallying bonds and rallying stocks. That's not really a good look for precious metals. Now, we're not making new lows here, lower lows in precious metals, and I think that's important. So it's a little sideways trading here. Crypto a little disappointing. You'd have thought, we'd like to see a little upward move here today with the other assets rallying. Okay, Bloomberg reporting that Trump plays down Iran escalation as talks focus on Hormuz. Trump said that he preferred to avoid another escalation in the war and urged them to make a deal. I think we're in a very strong position now, he said in an interview with Fox News. Now, he said, I'll bomb their major bridges if we can't, if no agreement can be reached. But if I can avoid doing that, I'd like to do that. Now, this is just, again, Trump talking. Oman and Iranian negotiators had talked over the weekend and are talking ongoing. In the meantime, there are, very few ships, at least with their transponders on, going through the Strait of Hormuz. And the Bab el-Mandeb waterway is, a lot of ships are actually not picking up Saudi oil from Yanbu. They're going to the Mediterranean port to collect Saudi crude from Egypt. So, you're still getting, not a lot of oil is getting through, but it will continue to leak lower as long as the bombs and the missiles aren't dropping. Now, you can look at Brent here, down another 5% today. Now, what we call this is an adult swim. I mean, you had this huge rally. If you got in any time on the rally, it was great, but you had to remember to get out. If you didn't get out, look at how rapidly this dropped. This was a 5% drop. This is an 11% drop. This is another 5%. That's a 21% drop in 3 sessions. So, this is a interesting place to play. I think we continue to leak down to around here a little bit more, and we'll see what happens with the negotiations as the week moves on. Gasoline and diesel down, but lightly, just 1%. And in good news for the administration, this is the first dip in gasoline prices at the pump on average since the 7th of July, when the hostilities really restarted. The Iranians, shot at ships, and we bombed them back for about 2.5 weeks. Okay, so. This was a really nasty drop in the Korean index overnight, 11%. SK and Samsung down aggressively, and this is behind Nvidia down 5%. Chip makers. This looks about as oversold as it has been on the RSIs in a year, and you can see a retracement. Now, this retracement's important. I drew it from here, but if you drew it from there, you'll get different retracements. But it's a pretty deep retracement. I mean, 78%. I think we could bounce, but it's going to be a corrective bounce until we can consolidate, at least get, higher lows and eventually higher highs. So, I think we can consolidate from here. Okay, U.S. S&P futures, really consolidating down yesterday, up a bit today, sideways, broad bounce. I mean, other than technology and energy, everything is up, and there's still there's a lot of green here. So let's see what the Fed has for us tomorrow. Okay, Impressed by Ukraine's battlefield gains, Trump warms to Zelensky. Not specifically markets related, but that's important because for a long time, Trump felt that Ukraine was losing the war, and Trump admires success and hates losers. That's historically always been true. It's just a part of his character. But apparently in recent weeks, he's expressed fresh optimism for Zelensky, and the fact that Zelensky is taking the fight deep into Russian territory. You see all these refineries getting hit in Moscow and in Siberia. And, he also admires Ukraine's drone industry, especially its ability to defend against the same drones that we're facing in the Iran war. And, Zelensky's increasingly looking like a winner. They're meeting today. Let's see if anything interesting comes out of it afterwards. And Trump is a very interesting character, right? The Ukrainian heavy champion boxer Alexander Usyk impressed him during a meeting in the Oval Office, gave him a signed boxing glove, and Trump asked, "What's the difference between Ukraine and Russians?" And apparently Usyk said in his broken English, "Heart and head." So that impressed Trump. And then also right-wing actress Laura Loomer, who was anti-Ukraine for a long time, went to Ukraine, interviewed Zelensky, and changed her tune. So hope Zelensky does really well today with Trump, because that's good for the U.S. We can certainly use some of their drone technology, which they're more than ready to give us. Good for the Ukraine, and ultimately good for NATO. Okay, not a lot. I know I'm running out of time a little here today, but we just had some. Not everybody's reported, but for the ones who did, Coke and Boeing are up nicely. Everybody beat on earnings, beat a little bit on revenue, but UPS is down, so it must have been some bad guidance. And we'll look more at this later in the week. Okay. In terms of data, ADP came out today. This is a 4-week average of 15,000 new jobs a week. That's 60, 70,000 jobs a month. That's just a little above the jobs that need to be created to absorb the new people, the new labor entering into the economy. So there is, and consumer confidence is lower on the war. There is really no need to hike. I don't think they will hike. I would be very surprised and eat crow if they hike tomorrow. Now, there's no regular briefing tomorrow, but tune in for the wrap from the Fed for me. And then we have a special guest, Dr. Claudia Sam, who will talk about what she thinks of the Fed decision. Thanks for joining me. We'll see you tomorrow.